Unemployment boys. Chose. So let's just do. So yesterday, I got caught up trying to buy price on this candlestick and this one up into here, but I was short-sighted and I saw the swing low and the stops below it, and so I thought, well, it might reach into that and sell up here. Sorry, and then buy up into it. I then got a bit. I was like, you know, like no, let me rush it. I, some matchsticks are so fucking ass, dude. So when it comes to targeting the fair value gap and what ended up screwing me over was, if we look at the gap, let's just say that I wasn't aware of this swing low, okay? But I'm looking for a high probability setup into that. It means in using the 5 minute to look for fair value gaps to show signs of weakness. What is something that I need to get through my thick fucking skin? It's not about the lowest point in the market. One thing is always shit with YouTube, bro. So what I mean by that is, if you're looking at the time here, so I'm trying to get in. So here, as 9 o'clock forms, right? So there's an initial run up here. Right, this inversion fair value gap right here. And so I see the 5 minute makes a close with a propulsion block. And so when this candlestick trades lower, I'm like, well, damn, we could see it, you know, reach into here. And it closes below here, and my stop loss was right below this candlestick. So I then lost. It was only $1 and 50 cents. Then the market traded back lower here, and again because I was an eager beaver, then on the 1 minute there was a bullish BPR. It was not a high probability bullish BPR, but once again, desperation leads to very, very stupid choices. Um, and so, like you see it here, of I was just trying to see price come back down here. So it's exactly as to why I shouldn't really have my stop loss there. But so this one candle just took me out entirely. And so it came back down. I saw us trading below these lows here. And although we made these exact lows, I saw the the lower body here, and then the bullish BPR. Again, on the 1 minute, it's always good to wait to see what the next candle is going to do. And once again, the next candle just ran for the stop loss. And so that was that. Now, in all of this, what you always want to see is, say, if I leave the 1 minute alone when it comes to these 5 minute PD arrays, and I'm like, okay, no, cool. We're just going to work off the 3 minute then. So you see the 3 minute closes outside of it, and this candlestick closes inside of it. What I've been talking about lately is then you want to see it close outside of it again, then continue higher, right? It doesn't, just drops, right? Then you get this 3 minute bullish BPR trading up into this gap. And I've been saying now, like, no, when you get these two gaps that are formed within, say, they are consecutive fair value gaps. then rather look for the higher one to get close past, because then, because the second you go long off of, or the second that I go long off of the first one, I find myself, there's like, this is my, I've not passed the roadblock basically. So I shouldn't see this as my roadblock. This should just be, as you see here, it gets used as support there and it gets used as support here. But you notice how this one is really only validated. I mean, this close above here, many a time in the past, I would literally, as it trades back down into it, you get in long, then suddenly it does this and then it trades up higher, and then you're like, and then I would stand there and be so pissed off because I'm like, what the fuck is going on? And yada yada yada. Um, as well as now, if you extend that other 5 minutes, you see how price came back down to it here, 3 o'clock, but then you got that push up into the 1 hour. So yeah. So when it comes to this now, right? Um, so then the market eventually trades back down and gets to the sell side point, because I'm like, okay, no, you want to see 1 hour point get swept. And then once again, like many a time, the 1 hour doesn't clear the New York PM session, the New York lunch lows, but instead it runs for the lunch highs here, right? And so as it dips back down here, then, but because I've already now lost, what's 20% of the account? Yeah, I've basically lost over, no, dude, it's not 20% of the account. It's like 15. Okay, look, so from the initial balance, if we do that, um, yeah, it was about, I lost 12% of the account. So I'm saying, so the account was on about $18 something, about $18.50 or so. And then, so after that loss, I'm down to $16.11. So then I get thinking to myself, um, well, no, I mean, let me not, let me not, you know, let me not take, because I took a loss in the morning on gold, took two smaller losses, then, well, I guess combined they were slightly bigger than the gold loss. But then I take those two combined losses, and then it leads me to the desperation. So I said, no, dude, like rather just leave it alone and wait for, you know, a proper model to form. And you see here after the market traded a hell of a lot lower, which was, sorry, I'm looking at the wrong time now. It was over here with this 1 hour SIBI, that yellow. So I know that that's the 1 hour SIBI that I still want. You can see how it ran up to it here, then it just gave up the ghost. And once again, everyone eager to buy right here, even from this inversion fair value gap here. A rule I've also noticed is if you buy it and you see the gap, see price trades above it, then you get that close. Rather just leave it alone. Rather say, even if you got in here at the top, rather take that smaller loss and then allow the market to do its thing, because there's always that option to re-enter. So back on the 5 minute here, you can see, right? So as we got to the New York PM session, that's still the target. It's simply a story of, um, like here again, once you see the highs here get traded past of this inversion here, and price keeps going higher, right? That's why the stop loss goes at break even. Because in here, fine, you'd be pissed that you were up all of this and you get stopped at break even, but then again, you just wait again. And you get one fair value gap here, and then you get another one formed over here. And you can see that then there was actually another one way up here. So this now already gives an indication of there being another fair value gap, for example, on the 15-minute time frame. So if you go to it, then you find that, okay, no, so there's one big gap on the 15. which means that if the 5 minute were to close past the high, then that's already an entry model, simply because you're doing top-down analysis there. So what do you see there on the 5 minute? So we close past the 15-minute consequent encroachment, right? We supported there, supported trade. We trade back down and close below it, but we stay above this 5 minute now inversion fair value gap, right? So now with that other model where I'm demanding this extremely high risk to reward, I'm looking at this and I'm like, okay, so I would want to, for example, enter here on the 5, but entering on the 5 minute and at the high end of the gap, but that stop loss gives me quite a big stop loss, I must say. With the current account size, it's going to be a $5.30 hit, which is a bit steep. Although yes, could have made $12, although the TP is here at the consequent encroachment of that higher time frame PDRA. S3R is still a very good risk to reward, but then the problem becomes just how much I have to risk, because I wouldn't be comfortable with having a stop loss here where there's this unfold fair value gap. If I got tapped out there, even if whatever you get 7R and that whole bullshit, it's just so I wouldn't be prepared to take that trade just yet. So this becomes the first fair value gap. So as I was looking at it, many a time, like yes, you do at times run the fear of after price closes past the low end, because you see how you have. Why did I delete that 15? Yeah, let's lock that. But the color is too high, dude. The opacity shit. It's no man. What's a fucking rectangle, man? Right. So I'll go and check step index just now. I'm just waiting for it to. Well, I can see it dumping lower, which is fine. But I'm gonna want 2 o'clock. We run this previous hourly high. There's a 1 hour SIBI, and also you see this pre-market Asian high here. I want to see us take that high out, and then below here there's a weekly unfold fair value gap in the form of a busy. So I'd want to see us trade higher up into that gap, and then we sell off. If we sell off immediately and I don't get that sweep, then there's no entry model at all. So to go back here, now if I'm still iffy about, yeah, but you see 1 o'clock opened and we didn't clear any sort of previous hourly low, then it's fine. The first fair value gap occurs, you leave it alone. Then you see that you have a second one here, right? So when there's this close there at 807, and you're like, okay, this stop loss here is reduced compared to that other one, then there you go. Then on the high end of the gap, as well as now you've got this wick here. So because you got a premium wick, you also kind of think that, okay, like if you see the market absolutely just smash and close past this wick low, which is also a gap, then it's likely that the market's going to reverse. So your stop loss decreases in size, fortunately, and if you then look for that consequent encroachment, risk to reward increases. Now, the thing about this is not even, you see how, in terms of like mentally, right? When you've been unprofitable for so long, oh, let me turn off these lights. So you see, like, so when you've been as unprofitable as I've been, then it becomes, there's this mental shift of like, you know, like you want to, when you think of a range, for example, like here, all you want to see is So as the market comes down and say, for example, does that, when you get these, okay, this is drawn like shit, but same thing. Like, how do you maximize this chart? So then I'd be like, no, I'm looking for, like, you want to see that immediate bullish change in the state of delivery here, have that lowest target, and then be shooting up. But that same thing that you see here at that swing low might have formed here and then stopped out. And then then the same thing prints, but because of that previous loss, mentally you're like, okay, no, mentally I'm like, I don't want to take it. So then what ends up happening? Then market runs away from me. So, but then when you look at over here, right, you don't get as good as a risk, to reward, but your but the strike rate goes up. If you've got a 70% win rate with a 1 to 3, only taking 3 to 4 trades per week, I think that's very good. Um, Gold, I'm gonna leave for now because this is a 4-hour gap that saw at pre-market that gold was going to be trading up, lower into this gap. So what we could see at the start of the new hour is price manipulating lower, and then we get that nice push up. Because I mean, even if we're just looking at the 1 hour, you see these very smooth highs here. So yeah, where's my alert? I set an alert somewhere on gold. Maybe I forgot. So what I'm going to do is I'm going to set an alert at the swing low, because if I'm going to be buying gold, I'm going to want to see price at 2 a.m. run below this low, potentially trade up or trade down into this fair value gap. And then I want to see it come up into this 1 hour gap here. So it would be about that push 16 point, like, yeah, 16-point move, which if I managed, obviously, even if I can only secure about $10 of it with a very good risk to reward, I would be happy. So that low is now my pre-market. Just because of spread, I'll hold it there. So I'm going to be monitoring gold. I want to buy up into this unfold fair value gap. And in terms of, sorry, if I can just finish this quickly in these next few minutes. Over here, not ignore, but look at the first gap and be like, okay, cool. Don't enter just yet. Try and see what the second one does. And because this is also the swing low that's formed. So you could have entered there on the 5-minute, which would have given as well a favorable risk to reward. Additionally, an entry on the 3-minute was also possible. And as you can see, it would have been, because it was the same candle. It was uh, the candle that began at 142, closed at 145, which is also the opening of a new 5-minute candle. So swing low on the 3-minute, perfect inversion, wonderful. And here you see how after it closes past the 5-minute gap high on the 3-minute time frame, it returns to a propulsion block. So that as well, there could have been some sort of entry criteria. But again, the stop loss size from there to here was, in my opinion, just too high. Hence why I would not want to take that one. So for step index now, we've got a similar setup like what we're seeing on gold. And we're seeing that we are, see how you've got to, it's very annoying how I've got to analyze using so many different platforms. So you've got a weekly unfold fair value gap here at a BSI at a low of 8578. So from current market price, it's 33. Well, no, are we at, where are we? Yeah, so it's about 27 to about 26 points below where we are, 8578, meaning it's this low here on the daily. This is the sell side in which price is targeting. So if we look at the 4-hour, we are trading up into this bearish propulsion block here, this up close candle, and then on the 1 hour time frame, I'm looking to see price at now at, I guess if you're using New York time, now at 2 a.m. to at the start of the kill zone to run up higher. And ideally, I might want to see it breach up, so kind of open and just trade up into this 1 hour inefficiency. If we look at this close, 11.2, this open 11.1. There's also this very, very small, okay, I'll show it on trading view rather. There's a small 1 hour bearish PPR here. That's the low. So if I show it here, so come 2 a.m. now, I want to see that next 1 hour candle trade above this 1 a.m. pre-market high. And then if we look at the 5-minute time frame, as we trade up into that, I'm going to want to see a sell model. Again, this one here would have been taken on the grounds of clearing a previous hourly high, which was the midnight high. But note how you have these two fair value gaps. So if anything, my focus would be on the lower gap and then on the 3-minute to see how is the market going to react with it. Now, it could also close below it, but then as well, I'm going to want to trade off of the most recent. Either there needs to be an order block formed or the most recent swing high before we made the close below here. I'm just here staring at this cat. It's like he's in a stance to go and do a maza. So those are the two setups. Those are the present two setups that I'm seeing. So as well, just here on the hourly, super pre-market high, and then I was, like we said, 8578. This level here, and yeah, so that's the weekly unfold fair value gap, which price has been struggling. No, actually, it's this one here, the weekly BSI. It's that low there. So here we will mark this as the weekly. For fuck's sake, man. Weekly unfold BSI high. To build a home. To Hmm. Um, one thing as well here, you can see that when you ran up into that 1 hour gap here, we do use a 15-minute, that's a failed 15-minute inversion fair value gap here. But also note that I said ages ago that when you have there's a former SIBI or bearish fair value gap and you want to use it as a discount array, it needs to be in a discount, because if you look at here in this swing, or even here in this range, you'll see that this is in a premium. If you look at over here, you find that over 50% of this SIBI is found in a discount. If you go over to here, you find again that 50% of, or more than 50% of this fair value gap is in a discount. Hence why it can be used as a discount array. For example, when you want to then use a BSI in the opposing manner, you see this range here, you would ask yourself, first just this swing low to that swing high. More than 50% of this gap is found in a discount. You can note that when it's wick past here and all, actually wait, sorry, my bad. There's a volume imbalance here. So actually more than 50% of this gap is in a premium. So this can be used as an inversion favor gap. And that can be seen over there, because when it gets that close, trades back up into it, and then you see the sell run that's being initiated there. If I were to quickly just look over, you can see that I am either looking for price to trade up into this and sell off lower, or we could just see it, because I mean, look, because of the relative equal highs here, just all of the buy side and so forth, that's what's making me lean towards wanting, because otherwise I'm going to want to get short here, but then I'm going to find myself where it might want to make an inversion fair value gap to run the stops that rest above here. So because on step index I have a much easier draw on liquidity in that sense. I mean, if you're looking at gold here on the daily, yes, we cleared the previous day low, but we could see a continued collapse. But when we have made a bullish change in the state of delivery here on the daily, this flip here as well, as well as the two, well, we didn't reclaim this BSI, but we have reclaimed this BSI here as well. So I don't see, for example, it would be a different thing if I wait now for the next 3 hours. So then you see that 5 o'clock going into New York session. Then I'll wait for this to see, is this going to be a 4-hour gap? And then potentially then find a setup, because if you look at here, we still have this 4-hour unfold fair value gap. So for gold, I'm going to make the choice now to leave it alone during New York session, during London session, and let this 4-hour candle play out, because it's not that clear to me yet. If I were to step index, again, the sell side at 85.78, that's been marked there as a weekly unfold BSI high. All I'm searching for is either we run this high and trade up into this 1-hour unfold fair value gap. This is just a bearish BPR marked here on the hourly. So either we're going to trade up into this and then sell off lower, or you could see the market make a bearish inversion fair value gap of this. And yeah, if you see, or if I do see that this is going to be a bearish inversion fair value gap, that's fine. Then I will be looking for shorts from this point down here. but I don't want to get in short without seeing your run on stops, which I believe rests above here, and also just because you've got this unfilled fair value gap. And on the 4 hour time frame, it's a daily, sorry, on the 4 hour time frame, it's a bearish propulsion block. I would consider this an order block because it's got a swing point as well as these consecutive up candles. But this one, I regard that as a propulsion block because it is also attached to an up close candle. So yeah, just got to wait out, see what the market does here. I'm going to sit on the 5 minute time frame until then, and I just want to see. I mean, it's always bad luck when I do this, but I want to see that and then that. But you first could see that, then that. Meaning you first could see it come down to whatever the fuck is here, then run up. Basically, get people going long just to fuck them, or like get people going short just to fuck them. So I'm going to end this live stream here. The battery on this laptop cannot survive. And then, yeah.